Welcome to Perspectives from HSBC. Thanks for joining us. And now, on to today's show.
Welcome to Perspectives, our podcast series from behind the scenes at HSBC's Global Investment Summit 2025. I'm Piers Butler, and I'm delighted to be joined by two guests, Lucy Gazmararian, founder and managing partner of Tokenized Capital, and John O'Neill, Group Head of Digital Assets and Currencies at HSBC. Lucy and John, welcome.
Thank you.
So you're fresh off the panel that you've just held at the GIS, so well done on that. So John, if I can start with you, the theme is, can digital assets go mainstream? But is that in fact the right question? Are digital assets already becoming mainstream?
So I think what we're finding if we talk to our customers is people at different stages of their adoption journey for digital assets, and I think it's probably the same for crypto as well. I think some people view it as a fringe subject, others view it as very much part of their mainstream already. But what I said on the panel is that over the last 2 years, the proportion of our customers who really view this as a mainstream subject really has materially increased. So we're finding it's in a lot of client conversations. It's really come up in a lot of the policy conversations as well. So we very much think it's increasingly a mainstream subject.
Well, and judging by the room which was rammed, it is a topic of great interest. So, Lucy, I could sense in your voice the excitement from some of the recent announcements that have come out of the US. So maybe share with us some of that excitement.
I think, listen, a lot of different regulatory jurisdictions have been working on their crypto asset regulations and frameworks since 2018. And actually before that, if you're thinking of sort of jurisdictions like Malta, Gibraltar, the jurisdictions are getting more international financial centers. You know, you've got Hong Kong, Singapore, the Middle East, and China's been very clear on its stance in crypto. But to have a major economy like the US now not fight the industry, but actually embrace the industry and really actually set out how they're going to make the US a leader in this digital financial technology is really a watershed moment for the industry, because crypto has really been fighting against the establishment since its inception. It's, you know, an organic, retail, bottom-up initiative. That's how it came to the world, through Bitcoin. And now we're in a position where we're being embraced top-down by the most powerful people in the world.
How does it feel? It's like,
and it's actually, crypto's kind of confused because we're so used to fighting.
You sort of had a sort of siege mentality, haven't you?
Exactly. And if you gauge the sentiment on crypto Twitter, it's really extraordinary. It's like, hang on a minute, has the wind just been taken out of our sails? Wait, Trump is like telling us to create all these frameworks. And there's almost sort of, you know, lacking its identity right now. It's trying to sort of recalibrate, because actually what's about to happen is crypto is about to underpin global financial markets and our global financial system. And the US is going to lead this. So it's utterly incredible what is happening at this present moment in time in terms of crypto's history.
And from HSBC's perspective, does that mean we suddenly have to go a lot faster in terms of how we adapt to crypto assets?
So I think, you know, we always get into definitions here, and we prefer digital assets and cryptocurrencies. For us at HSBC, we're very committed and have been for a couple of years now to developments in digital assets and also safe forms of digital money. So we've tokenized physical gold, we've created digital bonds, and we're also, as I say, interested in making sure monetary development proceeds in a very safe manner. So we think there's a lot within particularly the institutional space, which we're seeing for digital assets. I think in terms of the wider cryptocurrency space, which is what Lucy was referring to, it's going to be very interesting over the course of this year to see how those policy announcements, I would say, in DC play out in terms of a market reality and how markets change and develop. So yeah, there's a lot could develop in 2025. So yeah, still a lot up in the air, I think.
I was literally just coming onto this podcast, had just interviewed Paul Mackel, our global head of FX research, and asking him, when are you going to have to start forecasting digital currencies? And he was equivocal about that. But strategic reserve in the US. I mean,
it's quite incredible. And coming back to FX, you know, when we get stablecoin regulation and framework and, you know, the rules of the road for how US dollars and other fiat currencies are going to run on blockchains, we're going to start getting global FX stablecoin markets. FX markets are about to become extremely fast, 24/7, cross-border instantly, much lower cost. And it's going to really open up opportunities for new countries to really get involved, because payments is about to increase and improve inefficiency by orders of magnitude. And so FX is part of the story as well. I mean, at the moment, we're all focused on US dollar-backed stablecoins. Gold-backed stablecoins are also, a piece of the market, but very small. And US dollar-backed stablecoins are about 99% of stablecoins today. But I'm already in discussions, I can't name names, with different central banks, and they're looking to have their own fiat government-issued currency as a stablecoin to be able to run on blockchains and plug into this new infrastructure. And so it's really going to change the payments landscape, because it's going to cut out intermediaries, it's going to reduce fees, and payments can happen 24/7, no 5-7 days. If it's a cross-border transaction with a country that emerging markets, it can sometimes the whole transaction can actually fail. So we're about to eradicate that, and settlement and payment is about to happen in minutes, not days.
Here we are in Hong Kong. Is it fair to say, John, that Hong Kong has embraced digital currencies more so than perhaps some other financial centres?
Hong Kong really has embraced the subject overall. I won't speak for the HKMA, but maybe some observations I would make is, in terms of digital and tokenized assets, there's a very strong push to make Hong Kong, as you say, Piers, a global centre. And we've had really material cooperation with HKMA and other market participants as well in terms of driving that agenda and driving liquidity in Hong Kong. So we think that's been pretty effective. In terms of all the different monetary types, some of which Lucy has referenced, stablecoins, cryptocurrencies, tokenized deposits, I think the focus for Hong Kong and also many other global financial centres has been providing safe regulatory regimes and recognising these are a market reality. And certainly for things like tokenized deposits, which are tokenized commercial bank money, HSBC is very committed to driving developments in that. And in terms of stablecoins, which Lucy was referring to, in Hong Kong, as in many other locations, there's now a regulatory regime in place. And I think part of the focus of that from global regulators is just making sure a reality is safely regulated, particularly if those products are being made available to consumers. So I think there's quite an important protection point there as well.
On the landing page of your website, I did my research.
Thank you for visiting tokenmakecapital.com.
It says, backing the blockchain businesses of tomorrow. And then it goes on to say, we believe in a tokenized future. What is a tokenized future? Is that the picks and shovels of the crypto gold rush?
I maybe have to change the word future, because we believe in a tokenized reality. And actually, I really think it's upon us. I think this idea of getting money on blockchains, which is about to happen in the course of this year, is going to be an enormous game changer. It's going to unleash, because a lot of the financial institutions have all been experimenting with this technology. There's been a lot of what they call proof of concepts, or POCs, where you're it's a pilot or it's one-off issuance of a bond. But essentially what they've been doing behind the scenes, and John can attest to this a lot more than I can, is extreme experimentation that's been going on for 5 years plus. So what this new technology is, as the internet brought new types of businesses to the world that we hadn't thought of before. I mean, did we all think that Facebook was going to be, or Meta is going to be one of the world's biggest companies when people were sort of getting comfortable with the internet and with even social media? But here we are. When you have new technology as infrastructure, it gives rise to new businesses, new use cases, new ways of bringing marketplaces and people, buyers, sellers together. And that is what crypto and blockchain is going to do. So when I say I believe in a tokenized future, I believe in the superiority of this plumbing of financial markets in terms of crypto assets, digital assets, running on blockchains, open source public blockchains, is going to give rise to new use cases and companies. And my job is to find those companies and work with them and back them, and hopefully see these enormous businesses grow into huge success stories.
How hard is that, though? Because as we know from the internet age, many are called and few are chosen, to use the expression.
VC is a high risk stakes, high reward, right? So, but what's interesting, actually, being a venture capitalist in this space, I think so many investors have been put off by the word crypto and the negative connotations with crypto, which is for money launderers and criminals. And, essentially that was the world's first use case for crypto. So it took a while to sort of shed that reality. And for a long time, I couldn't utter the word crypto. Certainly not when I started the business. TokenBay was very much a digital assets venture capital fund. And now, again, crypto's come back. It's acceptable. It's cryptography. It's short for cryptography. This is what the technology is. And now we're realizing that it is just not used for illegal activity. And actually, we're now looking at the really exciting part of it. So I think it's scared a lot of investors away from the space. As with any new technology, there's a lot of speculation. There's a lot of froth. It's become famous for pump and dump schemes, for meme coins, for rug pulls, for you name it. But actually, if you're looking at it through the lens of sort of a traditional finance person, you're early to the game. There are the gems there. There are the businesses that are building the stablecoin companies, that are building the crypto custodians, that are providing insurance coverage for the new breed of regulated institutions that are going to come in. And these are just a handful of the companies that I've backed. And so, I wasn't put off by negative connotations. I saw through the promise of the technology, and it's paying off.
And John, from HSBC's perspective, so even though there's that negative connotation from cryptocurrencies and what have you, actually the demand, and in fact, I was going to ask you this question about when the Bitcoin ETF was launched. I looked it up. I hope this number is correct, but apparently 100 billion has flowed into these ETFs in the last 12 months. So even if it's not entirely accurate, the volumes are significant, so there is demand. I mean, is it a younger generation that is asking it, or is it across the board?
There's certainly demand, and we talked a little bit about the Bitcoin ETFs on the panel earlier, and they've been a remarkable success story. But I think one of the key features driving the Bitcoin ETFs, and particularly in the US, has been, as you know, if you invest in an ETF for, let's say, oil or energy or anything else, is that you don't touch the actual underlying product, right? You pay your profit and losses in dollars or euros or whatever the ETF is denominated in. So I think the secret with the ETFs has been really to allow a very wide range of investor types to very easily access a product where they're getting price exposure, but they're not actually exposed to the actual underlying coins in the same way as if it was, as I say, a commodities ETF. They wouldn't have to take delivery of the oil or whatever it might be, right? So I think that's been a very material development. I also think one thing will be very interesting to see is if price discovery for cryptocurrencies, Bitcoin being the classic example, if it moves into the ETF or futures market, because if you think of, again, oil or commodities, agricultural products, is generally the price discovery is through the futures, right?
Yes.
So it's be very interesting to see whether the derivatives start to lead the cash, basically, which is kind of classic market story. But Piers, I think that going back to just the discussion a few minutes ago, I think it's really interesting, or certainly the way we think about HSBC, to differentiate between the infrastructure and the liability when you're thinking about money. So blockchain-based infrastructure is a form of technology. It has a lot of potential, as Lucy has said, and there are a lot of benefits, but the principal benefit is more rapid settlement with legal finality. And you really have to marry the legal finality to the technology to make it work. That's certainly what we've found with our digital asset efforts. But I think over and above that, you can settle bonds more quickly, you can maybe exchange tokenized gold more quickly. There is the question about who is creating the financial liability, who's creating the bond, if it was a fixed income asset. But in the case of stablecoins, cryptocurrencies, who is actually creating the money? And with some stablecoins, what we've seen historically in markets is pegs have been broken or come under stress, and therefore I think Lucy would know.
Yes, so not so stable.
Yeah, not so stable. Yeah, for some Unstable. Of them. So I think being very careful in your product selection, as always, is really important, particularly for this new market.
So you need good advice from HSBC.
So I think HSBC is not providing, as you know, Piers, is direct advice on those kind of products at the moment. But Lucy, I imagine in terms of the investment choices you've driven.
I'm not giving financial advice either, just to be very clear.
Is in terms of the products you're investing in, that kind of perspective in terms of who's creating the money.
But all of that is going to come, isn't it? Two questions. One is in terms of a sense of time. How has the sort of time horizon shortened for you in the last 12 months? Like, was something that you thought was going to happen in 5 years' time? None. When do you think it's going to happen? Does that make sense?
Yes, it does. I think the whole crypto story has just been accelerated. But actually, the whole crypto story has been really fast. Bitcoin's white paper was 2008. We're 16 years in. And the US president has basically said the US wants to be a global leader and it's going to underpin the new financial markets and global financial system in 16 years. And if you add AI, which is not the topic of today's discussion, if you add AI into the equation, which is going to really help accelerate this even further, because there's a really nice, coordination between AI and blockchain and crypto, it's going to speed it up even more. And we're moving to a world where finance is going to be completely transformed. People say, and it's a global financial system, but the majority of the world are not participants. And crypto is really solving the access issue. It's giving individuals with anyone around the world internet connection and a digital asset wallet to participate in financial markets and to have access potentially to US dollars. These are people that never could access US dollars. So it's really going to change the game, and it's going to bring more people into global financial markets, and it's going to enhance wealth creation for everyone involved. And so it's great to see administrations and regulators really starting to appreciate that side of the equation. So considering Bitcoin's 16 years old, I'd say we're doing pretty well.
And John, maybe the analogy is you're working on a project and you thought you had 2 years to deliver it, and then the top of the house say, no, I want it next week.
Time is definitely speeding up, I think, and yeah, certainly many of the announcements we've seen, which we referred to throughout this podcast from the US, are very dramatic announcements, right? I think what will be interesting to see is how those are implemented. As I said earlier, some of the announcements, not all of them, are really about the US aligning with what's happened already in other jurisdictions, in other financial centres. So comprehensive legislation for digital assets is entirely welcome, and is something which happened in many other locations, including here in Hong Kong. I think some of the announcements undoubtedly are completely unique. The Bitcoin reserve is the one that's got lots of headlines. Of course, what we should know, and you kind of referred to this, I think, earlier, Lucy, is that that is cryptocurrencies, which is already owned by the US government, often through seizures for financial crime. So it's really repurposing something for a different purpose.
I do like that. It's really
Crypto's all about the narrative. It's all about the way you spin it.
So I think actually more material was that, although there was a suggestion in some of those announcements that there might be provisions in the future for acquiring crypto assets, it was clear that would have to go through Congress, and we saw a bit of a sell-off in the Bitcoin market that day as a result, right? So I think the devil is in the detail, and even more so in the implementation. But certainly it's very exciting, and the amount of attention the subject's getting is increasing. What we should also remember is more opportunities, but we need to be cognizant of the risks, and there are risks in this subject as there are in other financial subjects. So yeah, the pressure to deliver will increase. Our clients are asking for that, but we also remain very focused on the risks.
Yeah, which is a fair point.
Yeah.
You've both been at the GIS for the last 2.5 days. It's been intense. Any sort of things that have surprised you or takeaways, Lucy?
Wow, the number of attendees and how focused they are on the whole event and every single panel, and incredibly high quality content, high quality attendees. Great to see everything just, all this networking and buzzy atmosphere in Hong Kong. I mean, it's my first GIS. Hopefully I'll come back, but I think it's been absolutely phenomenal.
Yeah, I think it's very exciting. I think, as you say, Lucy, it's just the scale. I think we've had 4,000 attendees or something like that over the 3 days. So just people bursting to get in the room, which we saw in the crypto panel earlier. I think people are just really interested in participating in the discussions. And it's just great to be at HSBC conference, which I think compared to all the other conferences that go globally, people really want to talk about the subjects, right?
Yeah.
So it really is an active conversation.
John and Lucy, thank you very much for joining me today on this really interesting conversation as part of the Perspectives podcast series. Thank you all.
Thank you for joining us for this episode of Perspectives. Make sure you're subscribed to HSBC Global Viewpoint to stay connected